Welcome to the Deep Dive. Today, well, we're marking something pretty significant. It's the 10th anniversary of Ethereum, July 30, 2025. It's hard to argue it's not one of the most influential blockchain platforms out there.
Absolutely. Foundational, really.
So, okay, let's unpack this a bit. Our goal here, for you listening, is to dive into the sources we've looked at and pull out the key stuff. We want to explore how Ethereum just completely changed the game for crypto, DeFi, NFTs, even tokenizing real-world assets. It's touched so much.
And right from the start, the vision for Ethereum was incredibly ambitious. It wasn't pitched as just another Bitcoin, another digital currency. No, the idea was this decentralized world computer, a platform that could run apps, smart contracts, all without needing banks or lawyers or any middlemen. That was the big idea.
Quite the concept. And it really started with one person, didn't it? Vitalik Buterin. And you might find this amazing. He was only 19, just 19 years old back in 2013 when he put out that white paper. Ethereum, a next-generation smart contract and decentralized application platform. That was the title. Proposing this programmable blockchain with a Turing-complete language. Can you maybe explain for folks what Turing-complete really means here?
Yeah, good question. It's key. Think of it like this. It means you can basically program anything onto the blockchain. Any set of rules, any logic. It wasn't just a ledger anymore like Bitcoin's was primarily. It became a platform. You could build complex applications to these dApps that just run themselves. And yeah, Vitalik had the initial vision, but he wasn't alone. There were key co-founders involved too. People like Gavin Wood, Joseph Lubin, Charles Hoskinson, Anthony Diorio, Mihai Alisi. They were all crucial in getting it off the ground.
Right, a whole team bringing this massive idea to life. And that vision, well, it clearly got people excited. Because in 2014, they did an initial coin offering, an ICO. And they raised, what was it, $18.3 million selling ETH at just 31 cents a piece.
Incredible numbers for the time. And that funding, it directly led to the network actually going live. July 30, 2015, that was the official launch day, though back then it had the prototype name Frontier. Kind of fitting, actually. It really set the stage for this, decade of intense development. And, as we'll get into, some pretty major bumps in the road, too.
Okay, so Frontier launches. Now let's dive into that decade, 2015 to 2025. This is where it gets really interesting, right? The moments that defined Ethereum. And first up has to be smart contracts. Ethereum really pioneered these back in 2015. These are like self-executing contracts, programs that run automatically when conditions are met. No need for anyone in the middle. This opened the door for all sorts of dApps.
Exactly. But it wasn't all smooth sailing early on. 2016 brought the DAO hack. That was a huge deal. About $60 million worth of ETH was stolen because of a bug in this big investment fund built on Ethereum.
Oof, yeah, I remember that.
And it forced a really tough decision, leading to that controversial hard fork.
Yeah.
That's how we got Ethereum, the chain we mostly use today, and Ethereum Classic, which kept the original unaltered chain.
Super controversial at the time. Created a real split in the community.
It did. But looking back, you could argue it actually made the community stronger, more resilient. It forced these deep debates about, code is law versus intervention. Those debates still echo today.
And things really heated up around 2017, 2018. The ICO boom, remember that? The ERC20 token standard made it super easy for anyone to launch a new token on Ethereum.
Oh, yeah, the Wild West.
Totally.
Yeah.
And Ether's price just exploded. It went from under $10 in early 2017 to like $4,450 in January 2018. Now, okay, a lot of those ICOs were questionable. Very speculative.
For sure, lots of vaporware.
But it undeniably cemented Ethereum as the platform for raising capital in the crypto space. And right around then, 2017, we also got CryptoKitties.
Ah, the digital cat.
Exactly. Everyone was breeding these digital cats. It sounds silly maybe, but it was built on the ERC 721 standard. And it really, really popularized NFTs, non-fungible tokens.
It did. But CryptoKitties also highlighted a major problem, didn't it?
Oh, yeah. What was that?
Network congestion. The whole Ethereum network basically ground to a halt because of these cats. It showed very clearly that Ethereum had serious scalability issues back then. It couldn't handle that kind of demand.
That raises a huge question. How did they even start to tackle that? Because the demand just kept growing, right?
Precisely. And that bottleneck became even more apparent, even more critical with the next big wave.
Which was?
DeFi summer 2020.
Right. Decentralized finance. Protocols like MakerDAO, Compound, Uniswap, they just blew up. The amount of money locked in DeFi on Ethereum, the TVL, it shot past $1 billion. Ethereum was undeniably the king of DeFi.
No question.
But all that activity, again, strained the network, which makes the next big milestone even more critical. The merge in 2022. This was huge. Ethereum shifting from proof of work, the energy-intensive system Bitcoin uses, to proof of stake, POS. And the energy saving was just staggering.
99.95% reduction. It's hard to even grasp. And the merge, I mean, it was more than just saving energy, though that was massive. It was years of R&D, years, proving you could fundamentally change the engine of this live multi-billion-dollar network while it was running.
Like changing the engine on a plane mid-flight.
Exactly. A huge technical achievement. And it quieted a lot of the environmental criticism, It started attracting more institutional eyes. And speaking of upgrades, we should also mention EIP 1559 in 2021.
Ah, yes, the fee burning.
Right. It changed how transaction fees worked and started burning a portion of the ETH paid in fees. Millions of ETH burned since then, which makes ETH potentially deflationary depending on network usage. A big change to the monetary policy.
Okay, so we have DeFi booming, the merge happening, fee burn. But what about that core scalability problem that CryptoKitties exposed? That's where Layer 2s come in, right? Around 2020 to 2024, we saw this explosion of L2 solutions. Networks like Arbitrum, Optimism, ZK Sync, all designed to handle transactions faster and cheaper, sort of off the main chain, but still secured by it.
Precisely. They bundle up transactions off-chain and then post a summary back to Ethereum, takes the load off. And then the Denkin upgrade in 2024, that was another game changer, specifically for these L2s.
How so?
It introduced something called blobs, proto-danksharding technically. Basically a new, much cheaper way for L2s to store their transaction data temporarily on the main Ethereum chain.
And the result was?
L2 transaction costs just plummeted, down by like 10 times in many cases, made using these L2s way more affordable.
Wow. Okay, so technical upgrades are happening fast. And in parallel, we're seeing more mainstream institutional interest too. The big one was the approval of spot ETH ETFs in the US in 2024.
Huge validation following Bitcoin's lead, but still massive for Ethereum.
And the inflows were significant, right? Over $9.6 billion by early 2025.
Yeah, it signals a major shift. If we connect this to the bigger picture, it's institutions really starting to treat ETH as a serious asset class.
And it's not just EPS. Ethereum has also become the leader in tokenizing real-world assets. RWA tokenization.
A massive potential market.
Yeah, it's already over $24 billion. And you have huge players like BlackRock putting things like money market funds onto blockchains, often using Ethereum or its ecosystem, tokenizing bonds, real estate. It's starting to happen.
It really bridges the gap between traditional finance and the crypto world.
So looking back over this decade, the impact is just immense, isn't it? Transformed DeFi still dominates like 60% of the market, nearly $85 billion locked up. Redefined digital ownership with NFTs, CryptoPunks, Bored Apes, that whole culture.
Yeah, love them or hate them, NFTs became a phenomenon on Ethereum.
Right. And then bridging TradFi with tokenization, plus getting that institutional buy-in with ETFs and big companies like GameSquare using it. It's quite a track record.
Absolutely. But, it's not like all the challenges are solved. Ethereum still faces some pretty significant hurdles, both technical and regulatory. What's fascinating here, though, is how the community is constantly working on these issues. It's never static.
Right. And let's talk about those challenges. Yeah. Scalability on the main layer, layer 1, is still a thing, isn't it? Even with L2s taking off, that base layer can only handle around, 13 transactions per second? Why is that still a bottleneck for, true global adoption?
It's a fundamental constraint of trying to keep the main chain highly decentralized and secure. That 13 TPS limit means if everyone tries to use L1 directly during peak times.
Like CryptoKitties or DeFi Summer.
Exactly. Gas fees just skyrocket. It becomes unusable for small transactions or everyday users. And while L2s help massively, some critics, like Marty Party for instance, raise concerns that some L2s might be sacrificing decentralization for speed. They argue they're becoming a bit too centralized.
That's a fair point. The decentralization trade-off.
Yeah. And even with L2s making things cheaper, interacting directly with L1 can still be too expensive for many potential use cases and users worldwide. It's an obstacle.
And then there's the regulatory side, always looming, especially in the U.S. What are the big worries there?
Well, there's ongoing uncertainty. The SEC hasn't always been clear. Some analysts even worry that certain assets, especially maybe some on layer 2s or involved in staking, could potentially be classified as unregistered securities down the line.
Which would create a huge mess.
It would. That's why there's a push for clearer laws, like the proposed Market Structure Act or the Clarity Act. The industry needs rules of the road to innovate confidently.
Plus, competition is heating up, right? Other blockchains are out there.
Definitely. Chains like Solana, for example, boast much higher speeds and lower transaction costs, directly competing for users and developers. Ethereum can't just rest on its laurels.
So how is Ethereum responding to all this? The scalability limits, the regulation, the competition?
Through constant innovation, really. We talked about L2s and Denkin. The roadmap doesn't stop there. Future upgrades, codenamed things like Fusaka and Glamsterdam, are focused on stuff like account abstraction and stateless verification.
Okay, hang on. Account abstraction. What does that mean for, like, a normal person using Ethereum?
Great question. Think of it as using Ethereum feel less like managing a complicated crypto wallet and more like using a regular web app. It could simplify things like paying gas fees, maybe let you pay in stablecoins, enable social recovery for lost keys, basically hiding the complexity, making it much smoother for mainstream users.
Oh, okay. Removing friction.
Exactly. And stateless verification aims to make the network itself lighter and more efficient. Plus, you have this incredibly dedicated community. Over 1 million active validators securing the network now. Organizations like the Protocol Guild funding core developers. It's a very decentralized but coordinated effort.
So looking ahead then, what's the vision for the next decade? If leaders at places like Consensus or Coinbase are right,
The vision is huge. Ethereum as the settlement layer, the base layer for a new global economy. The trust layer for the internet, essentially.
so what does that look like in practice?
Well, you'd expect massive enterprise adoption. Big companies not just experimenting, but running core parts of their infrastructure on Ethereum, likely using customized L2s.
Okay.
Widespread asset tokenization becomes the norm. Stablecoins, yes, but also bonds, stocks, real estate titles, carbon credits, all living on-chain, traded globally, transparently.
Right.
And maybe the most exciting part, invisible integration.
Invisible integration.
Yeah, where you're using services, playing games, interacting online, and you don't even know you're using a blockchain. It just works seamlessly in the background.
Like the internet protocols today. TCP/IP. Nobody thinks about that.
Precisely.
Yeah.
And that enables totally new things. AI agents transacting autonomously, complex in-game economies with real value, maybe even social networks owned and run by their users on-chain. The possibilities get pretty wild.
Wow. So Ethereum's journey from this like bold experiment 10 years ago to potentially becoming this core global infrastructure. It's been quite the ride. The resilience is amazing, isn't it? Through smart contracts, DeFi, NFTs, tokenization, the merge, L2s, now institutional adoption.
Yeah.
It keeps adapting.
It really does. But it's important, I think, to remember those challenges are still very real. Achieving that full scalability without sacrificing decentralization or security, that's the tightrope walk. Bringing down costs enough for everyone globally, navigating the tangled web of regulations worldwide, staying ahead of nimble competitors, these are huge tasks. And ultimately, making it simple enough for your grandma to use without a manual, that's key for mass adoption.
Vitalik Buterin called Ethereum a creature in evolution. Seems pretty accurate.
Yeah.
So the question for you listening is, what does this all mean for you? As Ethereum keeps evolving, how do you see its role shaping up as potentially the backbone of this decentralized global economy over the next 10 years? Definitely something to think about as this digital frontier keeps pushing forward.